how do you even begin to make sense of a market that seems to change its mind every single day? I mean, especially crypto, right? It's so dynamic, sometimes just baffling.
Oh, absolutely. It feels like whiplash sometimes. One minute it's up, the next, not so much.
Exactly. And every expert seems to have a totally different take on why.
It's true. You know, crypto is this really weird mix of like cutting edge tech, raw human emotion, fear, greed, all of it. And let's be honest, pure speculation too.
Yeah.
Predicting it isn't really about having a crystal ball. It's more about understanding the different ways the key players are thinking about it, the lenses they're using.
And that's exactly what we're diving into today. We're trying to navigate these swirling currents of crypto predictions. We've got this really interesting pile of insights here, straight from executives, co-founders, people right in the thick of it.
Right. Each one has a pretty distinct viewpoint on where things might be going.
So our mission, really, is to unpack all these different perspectives for you. We'll look at everything from, the folks who swear by historical patterns and taking the emotion out of it.
Methodical types.
Yeah, exactly. All the way to people making these, super bold calls on specific coins, and even those sounding the alarm about, potential downturns.
And we'll dig into the why behind each one, the details, the data they're pointing to, drawing from the source material we looked at.
Okay, so where do we start with all this volatility? Maybe with an approach that sounds, well, almost calm.
Yeah, let's talk about the emotionless approach. This is the philosophy from Theodoru, the CoinStash co-founder.
Right. His idea is basically keep your cool, look at the past patterns. That's the key.
He sees this cycle playing out, pretty much like the ones before it. He has a very specific sequence in mind.
Okay, what's the sequence?
So first, he expects Bitcoin to hit new highs, peak Bitcoin dominance. That's stage one.
Got it. BTC leads the charge.
Exactly. Then he sees traders taking profits from Bitcoin and moving that capital, rotating it.
Okay. And this is where the sequence gets really specific, right? Once Bitcoin sort of cools off.
That's when he thinks the money flows into altcoins. They'll catch up and do their little thing, as he puts it.
Right. And then within that whole alt season...
He predicts a meme coin run. That's when they just start to go crazy. So it's a very clear step-by-step process he's outlining. Bitcoin, then alts, then meme coins.
Almost sounds like clockwork. Is there data backing this up?
Well, yeah, the source material does offer some interesting bits that seem to align, at least directionally. Like, Bitcoin was apparently nearing a local top after hitting, what was it, $123,100 back on July 14th. And maybe more importantly, Bitcoin's dominance did fall recently, like 7.44% over the last 30 days.
Okay, so less market share for Bitcoin.
Right. And in that same 30-day window, Ether was up 20%.
ETH often seen as that first stop when capital leaves Bitcoin, right?
Exactly. It fits the pattern he's describing. And then there's the CoinMarketCap altcoin season index.
What about it?
It actually switched from Bitcoin season to altcoin season just this past Sunday.
Wow. Okay, so that timing is pretty uncanny, actually. It really does seem like the market's playing along with the script, at least for now.
It does seem that way.
Yeah.
But, while Theodore's focused on these historical cycles, not everyone agrees Bitcoin's about to fade or that the alt story plays out quite like that.
Right. Which brings up the question, how much do historical patterns matter compared to what's unique right now?
That's the million-dollar question, isn't it?
Because then you get a completely different and frankly much louder take, like Arthur Hayes from BitMEX.
Oh, yeah. Hayes doesn't really do subtle, does he?
Not at all. He made this incredibly bold prediction just Tuesday. He said, and I'm quoting the source here, that the coming Ether bull run is about to tear the market a new asshole. Very strong language.
Very strong language. He's not just bullish, he's explosively bullish on Ether specifically.
And he put a number on it, right? $10,000 for Ether by the end of the year.
10,000, yeah. That's a massive jump from where it is now.
So what's his reasoning? Why Ether specifically?
Well, it's interesting. He sort of frames Ether as being overlooked, even hated. He calls it the most hated large cap crypto, especially after Solana had that insane run, $7 to $280.
Right, Solana stole the spotlight for a while there.
Exactly. But Hayes thinks that sentiment is shifting fast. He even mentioned that Tom Lee from Fundstrat is now bullish on Ether too, kind of adding weight to his argument.
So it's about sentiment flipping for Ether.
Seems to be a big part of it.
Yeah.
Like it's undervalued and ready for a major catch-up driven by changing perceptions.
It's just, wow. A $10 K target is something else. But okay, so we've got the historical cycle guy, we've got the explosive Ether bull. But not everyone's focused on cycles or even specific alts, are they?
No, definitely not. You've got people like Michael Saylor, the strategy co-founder. His focus is laser sharp, just on Bitcoin.
And his view is pretty unwavering, isn't it? Like fundamentally optimistic.
Unshakable might be the word. He basically believes Bitcoin is past the point of any major sustained downside. No more crypto winters for Bitcoin.
He had that quote, didn't he? Something.
Yeah, back on June 11th, he said, winter's not coming back. We're past that phase. If Bitcoin's not going to zero, it's going to $1 million.
1 million. So for him, any dips are just noise on the way up.
Pretty much. He just dismisses the idea of big pullbacks or long bear markets for Bitcoin now.
Yeah.
It's a totally different mindset, pure long-term adoption, store of value thesis. Completely different from Theodoru's cyclical view or Hayes's altcoin focus.
It really stands out, that kind of conviction, especially given how volatile crypto actually is.
It does.
But, okay, to give everyone listening the full picture, we need to inject a dose of caution here too, right? Not everyone is calling for million-dollar Bitcoin or explosive alt runs.
Absolutely. We need balance. And that brings us to Seamus Roca, the CEO of Xepo Bank. He had a more, let's say, grounded perspective earlier this month.
What was his take?
Roca basically warned that the risk of a prolonged bear market is, in his words, still very real.
Okay, so the opposite of Saylor's winter is not coming back.
Exactly.
Yeah.
And what's really key about Roca's point is how he thinks it could happen. He emphasized that a downturn doesn't need some huge cataclysmic event to kick it off.
Ah, interesting. So it doesn't have to be like a massive hack or a regulatory crackdown.
Right. He suggests it could just be internal market dynamics, maybe a subtle shift in sentiment, something quieter that triggers a big correction. It really contrasts sharply with Saylor's certainty, doesn't it?
It really does. Okay, so let's try and wrap our heads around this. We've covered a huge range here. What's the main takeaway for you listening to this?
Well, we started with Mina Theodoru, right? The methodical pattern follower.
Yeah.
Bitcoin peaks, then alts, then meme coins. Almost predictable.
Yeah, the emotionless sequence.
Then boom, Arthur Hayes comes in with this massive explosive call for Ether hitting $10. Totally different energy.
Right. And then Michael Saylor, just unwavering Bitcoin optimism. Forget winter, it's going to 1 million, basically.
And finally, Seamus Roca pulling us back to earth, saying, hang on, a bear market is still a very real possibility, and it doesn't need a big drama to start.
So you've got cycles, specific asset mania, long-term fundamental belief, and cautious risk assessment, all from credible people in the space.
What it really highlights, I think, isn't just that they disagree on the price. It's that they seem to disagree on what fundamentally drives this market.
How do you mean?
Well, is it history and psychology, like Theodoru thinks? Is it about specific tech breakthroughs or institutional shifts, which seems closer to Hayes's view on Ether? Or is it this unstoppable long-term adoption story that Saylor's betting on for Bitcoin?
Yeah. They're weighting different factors completely differently.
Exactly. They have different core assumptions about how this whole crypto thing actually works.
So understanding these different viewpoints, these different assumptions, why does that matter to you?
Well, I think it gives you a much richer, more complete view than just listening to one narrative. You see the different angles, the different ways smart people are interpreting the same, often confusing data.
Right. It helps you understand the range of possibilities, maybe. And avoids you getting blindsided if the market suddenly follows a script you hadn't even considered.
Precisely. It's about being informed about the disagreements, too, not just the consensus points.
And, of course, we absolutely have to repeat the disclaimer that was in the source material.
Crucial point.
Yeah.
This deep dive, none of what we've discussed is investment advice or a recommendation. Seriously.
Every single investment, every trade, it involves risk. You really, really need to do your own research before making any decision.
Always. Your capital is your responsibility.
Okay, so thinking about this incredible range we've just discussed, the almost algorithmic certainty versus wild predictions versus deep caution, it leaves me with a final thought.
What's that?
What does this huge divergence of expert opinion tell us about expertise itself in a market like crypto that's evolving so incredibly fast? Does all this uncertainty just naturally lead to wildly different guesses? Or maybe it suggests something deeper.
Like what?
Like maybe in a market this new and dynamic, the fundamental rules, the ways we even value these assets or predict their movements are still totally up for debate. Maybe the truth about where it's going is just much more subjective, much more contested than in more established markets. What do you think?